welcome everybody. My name is Michael Camo. I'm Director of Content for T3 Live, and I'm here with Jonathan Stern because we want to learn all about him and hers, aka HIMS, which is one of the most popular stocks out there among retail investors. At T3, people are always talking about the stock in the room. When we mention it on Twitter, people pay very, very close attention. So that is why we wanted to bring in Jonathan, because he might be the biggest expert on HIMS in the universe, because he has a whole media empire around this one stock. And I'll just show you guys quickly what he's accomplished, which is pretty amazing. So I have his YouTube channel up, and he's had on Mark Cuban, Martin Shkreli. He's actually had the HIMS CEO on. So Jonathan, welcome. How are you doing today?
I'm good. Thank you for having me on the show, Michael.
Awesome. So what made you start all this?
Well, I wanted to start a stock community of some sort. That was the original vision. And I was thinking through which stock to do it on. I was thinking about Robinhood. I was thinking about Uber. I was thinking about SoFi. And the honest truth, Michael, is that I reached out to various analysts, sort of FinTwit names, said, would you like to partner to launch something? And the first person I heard back from was interested in doing it on HIMS. It's turned out to be just the perfect stock to build a media company around. And I can get a little bit into why. But that's the honest truth. I mean, there was a basket of 5 to 10 names, and I think I picked the best one I possibly could have.
Okay, I would certainly agree with that. And just so for full disclosure, so I am long HIMS stock. So obviously, I want to hear.
Do I need to talk about my position too? Because I'm long.
All right, yeah, that's fine. And Jonathan runs a company that is related to him, so obviously he wants good things for him. So why do you think this stock has captured people's attention so well?
Yeah, so if you're going to build a media company around an individual entity, like a single stock, you need a few things. Number one is constant news flow. And HIMS is one of the most controversial stocks on the market. Short interest is 34%. That's the largest on the entire S&P midcap. In my view, unwarranted, but we can get into that later. So constant news flow. We have a founder CEO that's extremely ambitious, pushing the envelope. Goal is to really 10x. Some people think 100x, that might be a lot, but the goal is to revolutionize the industry. They start each earnings call with a nod to Netflix and Amazon and Uber, other companies that have transformed their respective industries. That's what HIMS wants to do in healthcare. We have just a very compelling business as well. There are some stocks that I was thinking about doing, but sort of only capture Twitter's imagination for a period of 3 or 4 weeks. HIMS is an extremely compelling business. Free cash flow for 9 straight quarters, expanding margins, marketing as a percent of revenue declining, retention seems to be doing extremely well. I guess the final piece is that you need data. I don't know how it would work to build a media company around Palantir or Rocket Lab, because so much is opaque. There's so much that you don't have access to before the company reports earnings. With HIMS, 99% of their revenue is online. It's what they call online revenue. And so we get credit card data that gives us an indication of how the company is doing each week as the quarter's going on. And so we report on that credit card data. We report on Google Trends. We report on website traffic. We report on app rankings. And you take all of this together and you have a sense for how the business is doing throughout the quarter. You don't have to wait till the earnings reports to know. So I've built some models that predict revenue. I've built some models that predict subscribers. And that's part of the company as well. And it turns out a big part of why people pay to be in the community, because we know how HIMS is doing, on April 15th or on May 15th, in the middle of the quarter. You don't have to wait till the end of June.
Okay, so it sounds like you are doing full Wall Street analyst just independently. So what do you actually think you're doing differently than, I see there's, I think 13 analysts covering the stock now. So what do you think you're doing different from them?
Yeah, HimsHouse is a mixture of three things, Michael. It's a mixture of journalism, research and analysis, and community. So first on the journalism piece, earlier this week, we dropped a report. It was called a special report, but it was really an investigative report that went through the intake flows of some of HIMS competitors that had inked deals with Eli Lilly, Roe, LifeMD, Noom. And we discovered that even though they had this pact with Eli Lilly, they were still offering compounded semaglutide, which the pact, as we learned earlier this week, prohibited them from doing. They're still doing that. So I dropped a report, I think it was late Tuesday night, walking everyone through my findings. We also do the research and analysis, which is mostly the data tracker and my analysis on the weekly data. And then the third part, which in my view is probably the most compelling part, is the community. We have a community of 3,500 Discord, 3,500 investors from around the world on Discord. We have a Twitter community of 22,000. This allows us to crowdsource intelligence and research and perspectives in a way that Wall Street cannot do. You have analysts at firms like Bank of America and Citi, those are the bears, or even Morgan Stanley or BTIG, that, there's a team of 3 or 4 analysts probably, but they don't have access to 3,500 investors from around the world. We have people in the community that are at hedge funds. We have people in the community who are doctors. We have lawyers. We have political people. We have people like me that, are sort of entrepreneurial or just interested in emerging trends. We have teenagers. We have 60-year-olds. It really couldn't be a more diverse group of people. I think it's mostly men, Michael. But other than the gender breakdown, it couldn't be a more diverse group of people. More than half of the community is international, and so you really have every perspective on display.
That's interesting, and I can relate to it personally because a long time ago I used to specialize in video game stocks. And I got my edge from basically talking to the nerds online and message boards who would give you like the instant reaction on what's selling and what's not, inside GameStop and Best Buy and even, Circuit City going way back. So I do think there is a special advantage to having like a nerd army on, and I say that affectionately, like a nerd army on your side that's just obsessed with the details versus where, like you said, a bank might have a team of 2 to 4 people and they might be covering 25 stocks.
They might be covering 25 stocks. We're obsessed with one. And so right away, we're just going to care more. I think, I mean, in my view, it's beneficial that the vast majority of us have skin in the game. Like you have a mixture of opinions there. Journalists tend not to own the stocks that they're reporting on. I think that's probably wise. However, if I'm putting money in a hedge fund, I would like the hedge fund owner to be managing his own money as well. So I like the concept of skin in the game. I like the concept that we're not all long HIMS. There are actually some people that have turned short HIMS or sort of go in and out. But the fact that we all have a financial interest and that's behind our opinions, I think is part of what makes the community so compelling.
Yeah, absolutely. And I do think that there are disadvantages to journalists not having stakes. Yes, because there's also an incentive to create issues because if they generate traffic.
I mean, yeah, that's a separate discussion. If, the lead Eli Lilly reporter at Bloomberg owned HIMS or owned Lilly, right? And she's moving the market. There are certainly some conflicts of interest there. And I think it's probably wise that they don't or aren't allowed to own either. But I don't know. There's another side to that too, which is that she'd be more interested in getting to the bottom of what's actually going on because she's either financially benefiting or not.
Yeah. Okay. So let's actually talk about the bear case. So
sure.
I looked up in Koifin, it's a 27% shortage interest. Sometimes I know you said 34.
You use Koifin, Michael?
Yeah.
Okay. And they're saying 27. So I guess part of one of the things, sorry to interrupt, but one of the things that's so interesting to me as a result of starting this is that I'm basically getting data from anywhere that I can, right? So I've been on Koifin. I get screenshots from Bloomberg sent to me. I use Fintel. I use the Goodell terminal. We recently partnered with them. Extraordinary platform. I'm on, Yahoo Finance when necessary, but I'm using all the platforms. And one of the frustrating things to me is that this short interest thing, there's like no consensus on no consensus across platforms on what the number is. There's a consensus on number of shares short, but not a percentage of the float. And then you go to the institutional holdings, and that is there is a lot of discrepancy across platforms on that. So what I'll just say is that I thought the quantitative side had totally been figured out, and I think it mostly has. However, there are some discrepancies across platforms, and I think that's just worth noting.
Yeah, no, I totally agree because I have worked in financial data, and it is very odd that in 2025 with AI, getting something like an accurate share count can be, especially for an IPO, because you will see a company come public and one outlet will say the market cap is 2 billion and the other will say 15. And it's because there's something with share counts that is apparently difficult to determine.
It can be difficult. I think it has to do with how much is owned by the insiders, the Class A versus Class V. There are just certain nuances like that which can trip up the systems. But so in the case of HIMS, if we're talking about percent of the float, you have to exclude insider ownership, which is close to 10%. And if you do that, 10 to 12. And if you do that, it really is 33, 34%.
Yeah. I mean, either way, there are a lot of doubters. Now, in your opinion,
you can bring up that chart because it was stunning.
Yeah. So and it is, like you said, it has the highest short interest of anything in the S&P mid cap 400. And it's not like it's a lousy company that's losing money. So
and I want to note as well that the y-axis here is exponential or logarithmic, whatever the right word is, meaning we've gone from a situation of, less than 10% short interest, really 5 to 10% range, to now 33, 34%, in a matter of a year and a half.
Yeah.
We had 12 million shares short in February 2024. We're now over 60 million. So that's an increase of 5x as the company, by the way, if you look at the share price over that time, as the company has either 4x'd or 5x'd.
Yes. So Jonathan was correct about the chart being logarithmic. I love Koifin, but it drives me crazy that it defaults to that. But yeah, everybody can see on the screen that the short interest.
Yeah, look at that.
And it's not so. What, in your opinion, what is the bear? So I'm going to ask you to advocate against yourself, your whole empire.
No, it's fine.
Yeah. What is the bear case against HIMS?
Well, I own HIMS, so I'm extremely interested in getting to the bottom of why it's the most shorted stock on the S&P mid cap, even as, revenue is growing at 111% year over year. Margins are expanding. Free cash flow is positive for 9 straight quarters. It's basically a startup, but free cash flow has been positive for over 2 straight years. So let's try to steelman the bear thesis. We talked to Martin Shkreli on the HimsHouse podcast a little over a month ago. He said, we have a situation that's going from great to good, right? Revenue growth for Q1 year over year was 111%. It will not be that high in Q2. And so it'll probably be in the plus 70 to plus 80% range. So still eye-popping, right? But not over 100%. So you have a situation that's going from, earth-shatteringly good, earth-shatteringly amazing to good. And his theory is that this is a short-term trade for various hedge funds that are able to continue to pile on even as the situation gets a little dirty for them. I think that's as good a theory as I've heard. I don't really understand the dynamics at hedge funds where I think they're all in different pods these days, right? And the multi-strats and all of these words that I hear thrown around that I'll be honest, I don't fully understand what goes on in that world. Some people are speculating that there's a single whale that continues to pile on. Others think that it's sort of an army of shorts that are rising up against HIMS and doubling down at every opportunity. So Martin's theory is that we're going from great to good. There are a number of other bear theses, like Amazon is going to eat HIMS lunch. This company has no moat. Telehealth is a commodity. Customer acquisition cost is too high and rising. Now, if you do the math correctly, HIMS does not disclose retention or churn, but based on something in their annual shareholder letters, you can back into something like it. And if you do the math correctly, CAC is under control. But I don't know that the bears have really done that. That's a good taster for bear theses. Anything you would add, Michael?
I do think there's always a classic argument of, like Martin Shkreli said, going great to good. It's like, how long can it go? I think that's always the most obvious question, because it's like, and I do think also with subscription counts, I suspect, and it could be a hedge fund or a large profile short, will come out and say they are manipulating the subscriber number in some way. That seems inevitable. And whether it's because it's just like, it's the most obvious thing. And, accounting is sillily.
And I guess, can you give more detail into what they might allege?
Okay. So there could be things like sort of channel stuffing, like having outrageous promos at the end of the quarter just to get the subscriber number up. That seems like the most obvious one. And again, like, that's not illegal. I would suspect they'll be accused of doing things like that, or let's say something like, because I have a lot of experience in subscription businesses, or let's say people cancel and then they say, okay, we'll give you 3 free months, and they include that in the subscriber count one way or another. It's because, like, accounting is not black and white. It's open to interpretation. So I suspect that will happen at some point.
3. Okay. I think that's interesting. And we've already seen multiple short reports against HIMS, and you're right that we will see more given the short interest. It's almost a certainty. 3 more things, if I can remember. Number 1, litigation risk. I think particularly in February, many of the bears were convinced that Novo Nordisk was going to sue HIMS for continuing to compound semaglutide. That did not happen. And by the way, HIMS actually has a deal, is now a partner of Novo Nordisk, but that was a massive bear thesis. And there are still some who believe that HIMS is encroaching upon the law and that there's litigation risk. Number 2, revenue is going to fall off a cliff because HIMS is no longer going to be able to sell GLP-1s. Well, May 22nd has passed. That was the date that the compounders had to stop selling commercial dose semaglutide. HIMS is still selling personalized semaglutide. And again, if you look at credit card data, there has been a dip, but the idea that the company's revenues have fallen off a cliff, completely unfounded and at this point disproved. And number three, I think many look at the telehealth space and sort of have nightmares or visions about Teladoc. I don't know if you want to pull up the Teladoc chart, but that situation really is an unmitigated disaster. And from time to time on Twitter, you do have people comparing HIMS to Teladoc and saying, oh, look at Teladoc in the early days, it shot up too. That company is down, 95% in the last 3 years, pretty much since the Livongo botched $18 billion acquisition, complete incineration of shareholder money. So, that stock chart is enough, I suppose, to keep some people up at night. However, the management team is different at HIMS. The offering is different at HIMS. It really is a different company, and it really is a better company. So, the Teladoc chart doesn't scare me.
Okay, and I do find it interesting on the GLP-1 question. I mean, right on HIMS.com, it's like it has Get Wegovy right up here. So it's not like they're, completely out of the business. Now,
well, so they're able to say Get Wegovy because they just signed that deal with Novo Nordisk. So it's an official partnership. According to Andrew Dudam, the CEO, it's a long-term partnership, meaning incremental details are forthcoming and likely will be announced in the coming weeks or months. But this deal allows them to sell branded Wegovy at a discount. It's mutually beneficial to both. They're teaming up. HIMS is the front door to selling Novo Nordisk's product. Many have called HIMS the Netflix of healthcare because it really does want to be this distribution engine for the pharma companies. And with the Novo Nordisk deal, sort of the first notch in this dream or this vision of becoming a Netflix or Amazon of healthcare.
Okay, now I'm glad you brought up that specifically because when Amazon was getting started, nobody was really thinking it would be what it is now. So again, I'm going to bring up the HIMS.com homepage. Get Wegovy, regrow hair, have longer sex, et cetera, et cetera. Do you think this will be a completely different company in 5 years where with hundreds of offerings? And I mean, I don't even know, so, I mean, I'll have a follow-up question, but do you think HIMS will be a very different company in, say, 5 years by virtue of just offering more things?
Yes.
Okay. Care to elaborate on that?
Yeah. So in the company's shareholder letters, they have a roadmap. Right now, there are 4 main verticals: sexual health, mental health, weight loss, dermatology, which is basically hair loss. There are other verticals coming. So the company has announced testosterone. They've announced menopause. The company recently bought a peptide facility as well. I am no peptide expert, but the company wants to get into peptides. And if you spend any time on healthcare Twitter, you will have people talking about the unbelievable power of these molecules. And that's something that HIMS is going to be in as well. And so it's just to say, HIMS started as people used to call HIMS a boner pill company or, an ED company. But like the company does hair loss. The company does weight loss. The company does mental health. The company does testosterone. The company is about to do menopause. The company, is going to lead the world in peptides, or as a distribution engine for peptides. Many are speculating, if you look 5 years out, and maybe 10, that HIMS will want to get into drug discovery. I think that's a little speculative, to be honest, but in the Discord and online, you do hear people talking about the possibility that with AI and with a partnership at some point with NVIDIA or even Novo, HIMS might be able to get into drug discovery. But it's just to answer your question, Michael, is HIMS going to look different in 5 years? Massively different and massively more exciting.
Yeah, I mean, it does seem like they've managed to nail the things that people have an emotional response to, because, it's like, it's so hard for human beings to think long-term about their health, but it's like they're hitting people over the head with regrow hair, have longer sex. And listen, the boner pill discussion is worth having, because I think that's a big reason why so many retail investors like the stock, because it just like, there is something inherently like meme friendly about it. Like, everybody's made the same stupid joke. Like when HIMS is up a lot, it's like, oh, HIMS is on HIMS today. Or if it's down, it's like HIMS needs a little Viagra. So it does, I feel like, in kind of like the internet humor lore land, it seems to land like absolutely perfectly.
Yeah, I would not underestimate the possibility that we have a wild rally. And so like this, the stock is up 200%. Well, it was up 200% at times this year. But the meme factor combined with the short interest makes a 200, 300% squeeze possible. What if the public starts talking about HIMS as a platform play, which they should be, right? What if the company starts taking what if the public starts taking HIMS seriously as the Netflix of healthcare? You combine that with the trendy ads, like the fact that the company offers boner pills, but by the way, is led by a management team that is executing at a world-class level and has for 4 years since it's been public. You might see some violent price action. Already you do. I think it's already a top 3 or 4 most volatile stock on the entire stock market. If you just look at number of days with a 5% move, it already is. But I think the best is to come.
Do you think there's any chance HIMS could be acquired? Because, like,
who's going to acquire HIMS, Michael? Amazon?
That seems like the most obvious answer for a simple reason. If you can go to HIMS and log in with your Amazon login where your credit card is already stored, that's huge.
So Amazon has a healthcare division. It's called One Medical. Many of the bears think that it's going to topple HIMS. If you look at the app rankings, One Medical is consistently in the 90s or unranked. HIMS is consistently top 10, 15. Hers is top 20. Yeah, so One Medical is not eating HIMS's lunch at the moment. But nevertheless, it remains a big bear thesis. I'm sure Amazon wants to dominate healthcare. I don't know, Michael. I don't really want to get I'm not on much medication, to be very honest. I'm not on any. But I don't know that I want to get my medication from Amazon. Maybe with HIMS branding, like Whole Foods is not Amazon, right? They've kept that branding. So maybe you keep the HIMS branding too. But it's just to say branding really matters in healthcare. And I would rather have hairspray that looks cool and is from HIMS than in some stodgy bottle from Amazon.
Yeah, I mean, it is, because I do think Amazon, like, the color of Amazon is brown. So there is, you know what I mean? Like when you said that, I'm looking at an Amazon package on my coffee table, And yeah, but it is interesting because like I'm such a hardcore Amazon customer. I probably place 50 or 100 orders a year.
Right.
I don't even know if they've emailed me about One Medical. Like, I know I've heard of it, but like when you said it before, I just said, oh yeah, that exists. And maybe I could buy some stuff from there. But yeah, I'm not on any medication of any kind myself, so I really don't know. Like, I've sort of put myself through the HIMS funnel by, clicking on their ads and their website. So they serve me up more ads. So I can kind of see what they're all about. But
yeah, you might get some One Medical ads, but I suspect Amazon doesn't want One Medical to cannibalize other parts of the business. I mean, look, we'll see what happens with Amazon. I don't think Dudam wants to sell. I think at this point he would see that as failure, having grown 111% year over year. There's unfinished business ahead. Like the company just hired a CTO that was ex-Cruise. The company just brought on a COO that is ex-Amazon. It really is an extraordinary management team, and I do believe they believe there's unfinished business up ahead.
Yeah,
I think HIMS would rather be $100 billion company. The healthcare industry is how many trillions of dollars? No one knows because it's just too big to size. You hear a lot of numbers. HIMS is now expanding internationally. They just bought Zava, European. Like, we'll see how that goes. Bears think it's going to be a disaster. I sort of worry it's going to be a distraction, but with the management team's history of execution, I'm optimistic.
Yeah, I mean, Dudam is interesting because he does have that empire builder thing about he just has that kind of aura. Now, I think a lot of people out there imagine CEOs and founders as they just want to make a bunch of money and have private jets and yachts. But there are some that are in it for the sort of adventure and the winning itself. And Dudam absolutely has that vibe.
I think it's a mixture with him. I think he totally wants to be one of the great CEOs of his generation. I think there's no doubt about that. Many of the Bears don't like how much the management team is paid. It is some pretty hefty executive compensation. If you look at what the new CTO was given, it was like 1 million shares to be vested over 4 years. 1 million shares. Like, that's 1 million times 50. That's 50 right now. It's going to be, higher. That's a lot. That's a big package, right? These people are well paid, but they have incentives. The incentives are laid out in the proxies. The executives continue to get max pay because they hit the incentives. And for as long as that's true, you have to be bullish.
Yeah. I mean, I think the flip side, the bear side will be to hit these incentives. They might color outside the lines of it. Again, I'm just playing devil's advocate, but I mean, if they want to,
I'll say they didn't just beat the incentives. They blew the incentives out of the water in 2024. So I don't think there is any outside the line coloring there. We'll see what happens in 25, 26. It's a good point and worth watching.
Yeah. I mean, and they could also have internal plans we don't know about. So we can think of, what is their revenue? Am I correct about 2 to 3 billion a year?
They're projecting 2.3 to 2.4 for 2025.
All right. Well, maybe they're hiring a CTO on the expectation that they'll be at 50 billion in 5 years. So
they did release 5-year guidance of 6 billion. However, I think it was 3 years ago they released it was a so-called long-term guidance, and I think they close to doubled that. So I don't know. We keep a valuation model as part of HimsHouse. Our bull case right now has revenue at close to 10 billion by 2030. So that would be 60-70% higher than the company is projecting as the base case.
Okay, so and just so let's give HimsHouse.com a little shout out. So it is a subscription community, and what exactly are you sharing there?
Yeah. So, well, I'll say if you don't want to pay, that's totally fine. Happy to have you. We do have a daily newsletter that's free. We do have a Discord community that's free. I do post some valuable stuff on Twitter. That is, of course, free. If you want to pay and support HimsHouse, I do a data tracker every week. I release revenue predictions every week. We have an in-house valuation model with price targets, bear, base, and bull case. It's sort of a discounted cash flow analysis and a few other things, revenue build. All of that is $20 a month or $200 a year. And if you do want to support HimsHouse, would love to have you. But there is a free offering as well.
Okay. All right. And guys, everybody watching, make sure we put the link to HimsHouse down in the description below. And again, you can sign up for free. You can join the paid service, whatever you guys want. But if you're following HIMS, you should be following HimsHouse, obviously. Okay. So I think that's a good note to end on. So Jonathan, thank you for coming in and teaching us what's going on at HIMS.
Yeah, Michael, thank you very much for having me. This was a lot of fun.
Awesome. Have a great day.